Thanks, Kara. I will now call the hearing to order. I would like to begin by acknowledging that we are in Treaty 1 territory and the traditional homeland of the Métis Nation. This afternoon I will be chairing the hearing. My name is Robert Hutchings. On my direct left is Mr. Philick. On my far left is Mr. McIntyre. Representing the Assessment and Taxation Department today is Mr. Colatriglio. And our secretary today will be Ms. Balshaw. We will be hearing applications for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested have been described in each application, and we will limit discussion to those matters. The statements that applicants or the assessor make at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be it advised that comparisons of assessments of properties are not considered evidence of market value by this Board of Revision. The Board of Revision is appointed annually by Council and is independent of it and the City Administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note that the Board's decisions with respect to an application may be appealed further to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to Court of Queen's Bench if the matter pertains to the application of exemptions from taxation. Should you wish to appeal, for information on how to do so will be included with this board's order. With respect to the hearing process, I will confirm the matters to be addressed with each applicant following their swearing in. We will then have the assessor's testimony, followed by questions that the applicant may have, and then the applicant's testimony, followed by questioning again. Each side will have an opportunity to summarize if they wish. Once all the evidence about an application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the board will deliberate in private and make its decisions based on evidence presented here today. You will receive the order by registered mail as soon as possible. As information, all public hearings are live streamed, recorded, and will be part of the public record. And before we begin, can everybody please make sure their cell phones are turned off or on silent? Sarah, could you swear in both parties, please?
Hi, will you swear in this one?
I'll swear in, yeah.
Please state your name.
Mark Colatriglio?
Do you swear the evidence you present today is the truth, the whole truth, and nothing but the truth, so help you God?
I do.
Thank you. Please stand. Would you swear in or affirm today? Will you use the Bible or affirm?
I can use
Okay. Please state your name.
Jerry Bennett.
Do you swear the evidence you'll present today is the truth, the whole truth, and nothing but the truth, so help you God?
Yes.
Thank you.
Thanks, Kara. Good afternoon, Ms. Bennett and Mr. Colatriglio. First property on the docket is 805 Corridon Avenue. Mr. Colatriglio, we are dealing with a 2020 realty assessment and no other issues pending here. So if you'll, when you're ready, please begin. 805 Corridon Avenue.
Correct.
Thank you.
The roll number for this property is 1202-263-3100. It's 805 Corridon Avenue. It's located on the north side of Corridon between Lilac Street and Arbuthnot. This is a commercial mixed-use property, so there is two classifications, class code 60 and a class code 10. The value under appeal for class code 10 is $121,000, and the value under appeal for class code 60 is $258,000. Total assessed value is $379,000. There are two commercial main floor premises on file for this property and two residential apartment units in the upper level. There also is a substandard basement premise that we have on file for this premise as well. Total leasable area, 2,329 square feet. Originally built in 1914, and we have a small effective age on there of 1920. On page number 2, you'll see that the subject property last sold in July of 2014. The value or the sales price at that time was $550,000. The approach that is used for valuation on this type of property is an income based approach to valuation with two different income streams. The first being the Class Code 10 income stream, where we have two multifamily units with a monthly rent of $622.37. This can be found on page 4. Vacancy loss for this property is 2.4%. Expense ratio applied is 49.29%, and the capitalization rate is 6.10%. The NOI is $7,393. Capitalized, you get the rounded assessment of $121,000. On the following page, page 5, you can see the two main floor commercial premises as well as the substandard basement premise. The rental rate that we've applied to the first premise is $16.32. The second main floor unit, which is slightly smaller, has a rental rate of $16.50. The basement has a rental rate applied of $3.84. The total potential rent here is $22,814. Vacancy is 6%, which gives us an effective gross income of $21,445. The expense, non-recoverable expense allowance that's applied to the property is 2%, as well as shortfall at $6.50 a square foot. Total NOI is $20,108, and the cap rate used is 7.8% for a total capitalized value of $258,000 rounded. On page 6, you'll see the total summary of the income valuation with the total assessed value of $379,000. Following that, on page 7, you see some pictures of the aerial view of the property as well as the street view of the property. Going back to page 3, you can see the rental comparables that were used for this property. There is a range here. The range is as low as $12 and as high as $22.76. All of these rents are taken from the income and expense questionnaires that are received by the owners of the properties from within that area of the city. So all around Corden, there's one property there on Grosvenor, Stafford. The two that you see on Grosvenor and the one on Stafford are actually all in the same building. There's multiple civic addresses there. You'll notice that the effective age on a lot of these is newer than what we would have on the effective age for the property under appeal today. However, there are some buildings here that are built in the early 1900s. The one on Grosvenor is built in 1922 originally. So there is some older buildings that is thrown in there as well. But there is a large rental range, and the rates that are used for the current income valuation do fall within the range that you see on the comparables that are listed here. You'll notice on page 8 to 12 of my brief is blank. That's due to a printing issue. I did reach out to the board, who advised reach out to the applicants and see if it was acceptable to provide copies of that. I didn't have the chance to do that. I have the mailers here today if you guys would like to see them. Otherwise, I can speak to them verbally depending on what's acceptable.
I think we should have a copy.
Yeah, is there more than one copy? Mark?
Absolutely, yeah.
Yeah, we'll have a copy, please.
Yep, I'll send it around.
Including the, I guess we need, since you're presenting evidence, we need 5 of them?
Yep, that's correct.
Thank you so much.
Not a problem.
Thanks.
So this income and expense questionnaire was submitted to the city for the 2017 year. As you can see on the first page, this is our multifamily questionnaire. The rental rate applied, the actual rent collected is $770 for the 2 one-bedroom units, which is higher than the rental rate that's used in the current valuation. The rental rate that we've used is $622.38, and that's a modeled rent. Flipping to the second last page of the bundle, my apologies for not numbering the pages. You'll see that the subject property does list 2 tenants on their tenant verification form. The Hip Pooch has been there for quite some time. It's a long-standing tenant in the building. It has moved around a couple times, and the size arrangement of the unit has changed, but they get a semi-gross rent of $1,500 a month for the 500 square feet that they show for that property. The Peg is a newer tenant. I believe this is the start of their lease, and I believe they're still currently a tenant there at the property. And that is all for my presentation. I believe that the value is fair and equitable as it currently stands, and that is it.
Thank you, sir. Ms. Bennett, any questions on the evidence that the assessor has presented so far?
You had the sale price at $550, that's not what we paid for the building.
No, that's city records was showing for that
I think
property.
that's what it was valued at when we applied for the mortgage, but I'm correct, we paid $525.
Okay, I'll have to look into that, but yeah, typically we would get the sales information from Land Title's office.
Yeah, I believe I think the book that I have that the what do you call it, person that comes out to assess your building for mortgages,
The appraisal report?
appraisal, yeah.
Yeah.
I believe he evaluated it at $550, but we dealt directly with the owner of the building privately, and I believe we paid $525 for it. Also, you say that the substandard basement is not rentable. I mean, the Hip Pooch uses it,
Yeah,
but you could never rent it to anybody, it's not.
mostly just a storage.
One side is storage, and it's disgusting, because it's 100 years old, it's just a brick wall that's like, looks like a dungeon. And the other side, we painted it just so they can use, the Hip Pooch can use it, but it's not rentable at all. I'm not sure what else to say. Of course, your income is based on a different rent than what we're collecting at this point, right? Is that?
Yeah, correct. So the city uses modeled rents.
Right.
And they collect information through the income and expense mailers for
Right.
properties in the surrounding area to model those rents.
Right. Is that how you assess the value of the building, is through that
Yeah.
process?
Yeah, so the income approach to valuation would have you apply a rent to each premise, and the rent would be multiplied by the leasable area to get a potential rent. Then through the series of vacancy loss and expense, non-recoverable expense allowance that's given, there is some reductions to the potential rent to end up at a net operating income, which we then apply a cap rate to get an overall income-based valuation.
When you say expenses, like what are you putting under that for expenses, like just general utility sort of thing, or like?
It typically would be any expense that would be non-recoverable by the owner of the building through the lease. There are some things like structural expenses that are included in that 2%. But generally, it's viewed as an allowance for the owner of the building, the city recognizing that they're not able to recuperate all of their expenses through their leases.
Is what I bring in, what we put out, I mean, we don't barely have anything left because of the expenses that, every time we turn around, hydro's going up, or the heat's going up, or, taxes are going up, our insurance is going up, so, and the amount of money that you, or the rate you allow us to increase the rents, I couldn't buy lunch with them. really. I mean, so that doesn't even really cover, you know, mortgages and heat and water taxes and, you know, all that stuff that has to be paid out. And it's just getting more so every year that everything is going up and the rents are not going up. Well, 1% is nothing really. I mean, it's minimal for, and you can't
Okay,
raise.
Ms. Bennett,
Yeah.
you're gonna have your opportunity to present your evidence.
Okay,
But
sorry.
any other questions on the evidence, well, you are asking, but you're kind of presenting evidence at the same time.
Okay,
So-
sorry about that.
No, that's all right, no problem. Any questions on the evidence presented? I mean, you were asking again questions, but, yeah, I'll just say anything else that you're wondering about the assessor's valuation on the property. Okay. Okay. Brent, any questions of the assessor?
I have no questions.
Thank you. Robert?
I do. I'm probably a rookie, okay? You've asked for rental information. You've asked for expenses, if you look at farm
Correct.
and so forth. As an accountant, my background, I was then wondering, I could see why you would do an estimate and so forth, but you didn't have that information. Just for my own sake of knowledge, why would you not use the information that is provided to you that is in expenses and revenue in your capitalization and determining what the value is?
Yeah, the intent is to try to establish a market value, and just looking at the subject property's income and expenses doesn't really capture the market value for that market. It just captures the value for that property. So the intent is to use not just the subject property's income and expense information, but also from other properties within the market so that a market value can be established. And that's the intent of the legislation and allowing us to request information from property owners within the city. But it's just the city is conducting mass appraisal. So they need to collect as much information from the market to continue on that mass appraisal model, to build the statistical model that then used to value properties within the city.
If you had used these numbers, would the assess that you have now come higher or lower? Based on this thing right here.
Based on
The NOI.
the NOI,
Yeah.
the NOI shows here as $42,327.88. So if we were to use the same cap rate, you would see a larger value for sure.
Thank you.
Anything else, Robert? Okay, thank you. Mark, can you give me the blended cap rate between the
Absolutely.
two income streams?
If you look on page 6, you'll actually see it in the income value summary on the left-hand column.
Oh, yeah, okay, 7.26, okay, I missed that. Okay. And did you inspect the property at all, or is an assessor being there recently?
Not that I'm aware of. I drove by and saw the exterior of the property, but I didn't have a chance to go inside and inspect the premises.
So it's actually, I'm looking on page 7 of your picture, it's actually the one with the hip pooch, and I can't read the other one with the vinyl siding on top of the
Yes,
side?
that's correct, yeah.
Okay, okay, that's the subject property, all right. And, yeah. And the current effective year is 1920. No recent permits taken out that you're aware of?
There was some interior alteration permits that were taken out, but it was mostly just to reconfigure the retail arrangement for the two tenants that were in there. So there was some updating to the interior finishes, but nothing extensive that would cause us to adjust the effective date.
And the selling price in 2014 at the appellant is stated that it was actually 5.25. Any analysis or any information on that sale? Was it an MLS sale or was it a private sale?
It was private.
It was private, okay.
Yeah, the sale was verified by one of our staff members,
Okay.
and they included it for our analysis. They viewed it as an arm's length transaction in the
Okay.
market. Yeah.
Yeah, okay. All right. And the appellant stated that the expense, in her opinion, the expenses including the mortgage wouldn't make it a difficult economic situation. But in your analysis for doing valuation, you don't include mortgage payments, is that right?
Correct.
Yeah, so that's not considered a valid or a bona fide expense. When we look on the income expense statement, we've got basically high utilities, maintenance, professional fees, insurance, and property taxes as being the allowable expenses. Yeah.
Correct, yeah, the expenses that you see on the mailer are expenses that are explicitly tied to the maintenance and operation of the subject property.
Yeah.
So
Okay.
things like financing would not be expenses related to financing,
Right.
mortgage, interest, that stuff is not included in our analysis.
Yeah, and they have no place in the analysis of market value
Correct.
for the purposes today. Okay, all right. Those are all my questions.
Another, if I may.
Of course.
Just picking up on what you just said.
Sure.
When a person buys a piece of property, they also look at cash flow.
Yeah,
And
absolutely.
in effect, you got a mortgage payment, which comes out of the cash of the rent you're charging. But meanwhile, I can understand why you won't allow principal portion that goes against the mortgage. But I don't understand, as an accountant, if I was doing this person's tax return, I would include the mortgage interest as part of the expenses of operation. So why wouldn't that be taken into consideration?
Some owners or purchasers would require no financing.
That
So
doesn't matter, wouldn't each one be individual case, so you don't put everyone in the same basket. In other words, if I finance and someone else didn't,
Right.
I have an expense.
Yes, absolutely, there is an expense to the purchaser that takes on a mortgage to finance the purchase. But in regards to the valuation of the property, we would look explicitly at expenses tied to the operation and maintenance of the building itself. So we would look separate to the financing. Like I said, some purchasers would not have that same expense through a mortgage. So we wouldn't want to have two different valuations as a result of an individual's financial situation in purchasing a property.
Okay, thanks, Mark. Okay, I think that finishes everybody on the panel's questioning and the appellant. So Ms. Bennett, I see you've made a presentation here. Mr. Mark, have you had a chance to review this?
Yeah, I did have a chance to review
Okay.
through the document.
Okay, so Ms. Bennett, when you are ready, please.
To ask questions, is that what I'm?
I know you're gonna make your presentation of the
Yeah.
evidence that you submitted
Yeah.
to the board.
I understand what the gentleman said about including, you know, the mortgage payments and stuff, because, I mean, it looks like I have $42,000 left in my bank account, when in essence, I don't. I have a $36,000 mortgage payment a year, you know, I have corporate tax to pay. I also have to put out GST every 3 months. That all comes out of everything. I mean, it looks good on paper that I might have that money, but I actually don't. And every time the city sends me a tax bill and it goes up, which, it's gone up $2,100 in the last 5 years, which I find that kind of, you know, hard to finance myself every month, put money away and have money left for, you know, anything that goes wrong in the building. It's a 100-year-old building. The boiler is on steam. I've already had 2 expenses with the RADs. One of the tenants, you know, one of the appliances went. I mean, if I don't have anything left in the bank account, I have to really, you know, struggle around. And the rates for water and heat keep going up. You know, it's hard to maintain a building, and I mean, if the city wants small businesses to run, and, you know, I think they have to consider all the expenses that they incur on us to run a business. I mean, I can't ask the tenant, or I can't say to the other tenant, the commercial one, I wanna put your rent up $100 a month. He wouldn't go for it. He'd move probably, and then I'd have to start over again with someone else. The tenant that's in Hit Pooch, she's the owner of the building, so she's not gonna put her rent up. She's just, you know, she's trying to run her business, Hit Pooch, and run the building as an income for herself and her family. And just to try to, you know, manage to have something left at the end of the month to, so putting up the assessment every year on the building, which raises my taxes, is beginning to, you know, and everything else goes up as well, so I don't know what else I can say.
Okay. I'll ask you a simple question. If you think the assessment is wrong at $379,000 as reflective of 2018 April 1st market value, what do you think it should be reduced to?
Well, if it gets reduced, does that reflect your taxes as well, right?
Yes, it does, but we're not here to deal with the taxes.
Oh,
Yeah,
okay.
Of course, it does drive yes, it's portioned and mill rates are applied to that,
But if you raise the assessment, does not raise the taxes?
yes.
Yes, it does, okay.
If you'd like a minute to think about it.
Well, I just wanna look at my papers, I had
Okay.
something written down,
Yeah.
what the assessments were. Obviously left my assessment sheet at home unless it's in here. I guess I left my assessment sheets at home, but the assessments have gone up. I don't know if you have them from the last 5 years, what the assessment.
No, we don't. No, the assessor never presented that evidence. And we've got a comment on page one that is over the last 5 years, it's gone up.
Yeah,
From
it's gone up.
299,000 to 379, yeah. That's the only reference to assessment value.
My, you know, I mean, because the building is so old, and I mean, I don't know what you would sell it for at this point. I know they think Corden is a hot area and you can sell buildings, but, I mean, we did a private deal and with the owner of the building. I know other buildings on the street sold for more, and they had a tough time selling for the higher amount because people aren't willing to pay $600,000 for a building on Corden. That's really, a lot of them are older, some of them have residential on the top, and you know, the bottom is the retail, like they were houses and they built, in the old days, they built the front out, right? I think I would like to see it in the 350, but I mean, that's up to you, what you feel, but,
So you're stating you want it at 350,000?
yeah, I think that would be
Okay.
probably more
Okay,
agreeable to it, since,
okay.
you know, it's hard to get more rent out of people when they don't wanna pay that, you know, in an older building, it's small.
Okay.
You got two sides that are, you know,
I'm gonna make a comment here, maybe to clarify for yourself, that you made a comment that your personal financial situation should be considered as an expense and in the valuation. The reason that the assessor doesn't, and that we don't look at those circumstances and analyzing
yeah.
income expenses, because if you decided to sell today and you asked for 3 market evaluations from 3 different commercial, real estate agents, they would not consider your market, or pardon me, your financial situation.
No.
They would go into the market and analyze what that building should be marketed at and what it might get in the marketplace.
Right.
So they totally ignore your financial
No,
situation.
I realize that, yeah.
Yeah.
I just think that, you know, when they say that they look at and they say that it's got $42,000 left, but in my mind, I don't have that. And then it becomes a problem to run the building because I don't have that $42,000 like they think I have.
Yeah.
You know, because of course they're not considering mortgages and stuff like that. I realize that.
Yeah.
It's just that,
To keep it an even playing field for valuation, it has to be, the law
Right.
states, or the act states it should be estimate of market value. Yeah.
okay.
And the standard for analyzing that or developing that is standardized income and expense mailers.
It's an expense to me, but it's not
Right.
what you're considering to run a building. I understand
Yeah,
that.
in the marketplace, it's irrelevant.
Yeah.
In the marketplace, yeah. Yeah, okay, Mark, any questions of the appellant?
Just on the appraisal report that you had, do you know when and who did the appraisal and what the actual number was?
I can't remember offhand. It was, we applied through the CIBC. I don't know who they sent out. I can't remember his name. He did the market value on it, and then we went from there to the private owner.
Based on that, that's how the purchase
That,
price
he gave us
came out?
the value because we were gonna go through the bank for, the mortgage, and we decided not to, and we went through the owner privately.
I have no other questions.
Okay, thank you. Brent, any questions of the appellant?
Just one, so there was no appraisal report included in your submission?
No, I didn't.
Just the front page is shown.
Well, the first one of the pictures.
Yeah.
Where does it say appraisal?
That's what I was looking for.
I mean, I don't know what you're referring to as appraisal.
Yeah, this looks like it comes out of an appraisal report.
Oh, that's
Yes,
what
it
I was
did.
gonna
I just
refer
took the picture of
Okay, well,
yeah.
the front of the store.
You said
No,
there
I
was
should
appraisal,
be-
and
should have been more
assumed that there
clear,
was
yeah,
appraisal. Okay.
Well, the book was this thick. I didn't want to bring this.
And I was looking for the appraisal.
Yeah.
No further questions.
Thank you.
Okay, picking up on that, I'm assuming that the appraisal was done, or the evaluation of 2014 when we
Yes.
purchased it, is that correct? Okay, I have a couple questions. The tenants, you referred to the fact that if the hydro goes up and so forth, but I don't see any hydro in here as expense, so I'm assuming that the tenants are paying the hydro?
Yes, the commercial tenants pay their own, and the residential all pay their own.
And
We pay, the building pays the water and the heat for the building and the tenants. The tenants all pay their own hydro.
All right. And your maintenance repair here is only $218, when you did say that there was some kind of changes because of a permit was that picked up by the tenant to do the changes?
Yes, all we did was cover a hole in the wall, put up some, chip rock.
Yeah.
That was all we did, because there was an opening between the two tenants,
Right.
and we closed it with drywall, and that was it.
Okay.
And
So I was just wondering if there were more maintenance that should have been on here.
no.
Okay. I'm just trying to help. Okay, thank you. That's all I have.
Thank you. Okay. So regarding the sworn value for sale purposes on page 2 of the assessor's brief, the $550,000 reflects, somebody decided that was what was gonna be given to land titles for purchase or for sale price. Did you do that based on the appraisal? Because that's what's coming through in land titles.
I don't know who would have done that, whether it would have been the lawyer or,
Okay, okay. But you're saying that the appraisal, in your opinion, it was appraised at $525,000.
It was appraised at 550 by the person who did the appraisal when we were going to apply to the bank.
Okay,
Then when we went to the owner of the building to do it privately,
Yeah.
we only paid 525.
525, okay, yeah. Okay. And you're asking us to revise it to 350,000, reflective of 2018 market value. I'm gonna be blunt here.
I'm not expecting miracles.
We've got a sale on the property and appraisal on the property for about a little over $500,000 in 2014. So, and the assessor, you know, I did a calculation based on your net operating income on the income and expense statement. And if you capitalize it, what the assessor used as a capitalization rate, it comes up at $520,000. Exactly what you paid for it based on the net operating income that you submitted to the assessment and taxation department. So, yeah, I'll just make that comment. Yeah, I won't ask anymore. Okay. Mark, any requirement for a summary?
Nope, I think the value's reasonable as it is.
Okay.
The sale kind of gives us some strong indication as to what maybe that property would go for on the open market. I mean, sale's a little bit dated, but
Yeah, okay,
yeah.
okay.
Is this assessed value for 2 years?
Yes, correct. So the 2020 value would stay in place unless there's a physical change to the property that require change to the valuation, but it would stay in place for 2 years as per the Municipal Assessment Act.
So the next one comes out, what, in 2021?
The next reassessment would take place in 2022, and that would have a market reference date of April 1st of 2020.
Okay.
Yeah. Okay. Any requirements for summary, Ms. Bennett? Okay. All right. Thank you for appearing, and leave it with us, and you'll hear from us as soon as possible, okay?
Okay, thank you.
Thank you. Okay, so that concludes 805 Corden Avenue. And we've got, next property on the docket is 580 Toronto Street, and we're dealing with a 2020 assessment, realty assessment, pardon me, no issues. And I note on your first page of the brief, Mr. Goldtree, that you've got a recommendation on the property, is that right?
That's correct.
Okay, and have you had any contact with the appellant at all?
I did try to reach out. The owner was out of the country, and he had indicated that he was going to be back on August 29th, and he'd give me a call. I never did hear from the applicant, so.
Okay, so we're gonna proceed as a hearing with the owner absent due to travel plans, I guess. If you wouldn't mind going through, kind of summarize the assessment, the roll number and everything, of course, and the reason why you did the adjustment or recommendation on the assessment?
Absolutely.
Thank you.
So the roll number is 1304-004-0000, 580 Toronto Street. This is another commercial mixed-use property, so there's two classifications. In this case, there's a class code 20, which is for residential 2, applying to residential properties of 5 or more, or 4 or more, 5 or more, I believe, residential units. And then the class code 60 that is applied to the premises that are on the main floor and in the basement. I did do a exterior inspection of this property on August 15th of 2019, and that is what has led to my reduction of the proposed assessment. There was a fire at this property earlier this year in January. according to the owner, through my limited email contact, they do have insurance. They are in the process of getting money back through the insurance company, but there has been some damage there. It's evident when you look at the exterior of the property. Normally, we would not make an adjustment to a property on a 2-year cycle when the insurance is going to come in and the intent is to repair it. But based on the observed condition of the property and some analysis of the rents in the market, there was room to make an adjustment downward. The other thing, this property is built in 1954. There's a small 10-year effective age on it. That was actually reduced downwards as part of my inspection on the property, and that will help bring the rents down. Everything, as you can see on page 2 of my brief, is that this property did actually sell in November of 2016 for $550,000. And that also falls within our 2-year window of analysis between the reference dates for the reassessment. And I did put some weight on that sale in regards to looking at the overall valuation of the property. The rents comparables that you see on page 3 are pulled from that general area of the city. They're net rents for similar size space within that building. On page 4, you can see the income valuation on the residential component. They have 4 units there, 3 one-bedroom suites and 1 bachelor suite. The rental rate applied per suite is $591.55. Potential gross income $28,394. Vacancy applied is 2.6%. Expense ratio applied 53.86%. Total net operating income $12,760. Capitalized at 4.8% to get our rounded class code 20 value of $266,000. On the following page, you see the retail income stream for the class code 60 portion. There's 2 main floor premises and a substandard basement premise. The 1,000 square foot unit has a rental rate applied of $12.39, and the restaurant premise, which is the C4, the 834 square foot premise, has a rental rate applied of $13.65. The basement has a rental rate applied of $2.87. Total potential rent there, $30,917. 6% vacancy applied, 2% non-recoverable expense allowance, net operating income of $26,795, capped at 9% cap rate, which I was, originally this was the 8% cap, and that was part of the recommendation, was to increase the cap rate to 9%. So total rounded value for the class code 60, $298,000. Page 6 is a summary of the recommendation that I've done, totaling $564,000 with a breakdown of $266,000 for the class code 20 component and $298,000 for the class code 60. Page 7, you'll see some pictures, the aerial view of the property. It sits on the corner of Sargent and Toronto. The building faces Sargent, even though the civic address is 580 Toronto. Again, there's a printing issue with my briefs. I do have the mailers if you'd like to see them, but otherwise, that is all.
You might as well submit them for evidence.
Yeah,
They'll be
absolutely.
on file. Yeah.
Absolutely.
Thank you. Thank you. Okay. All right, thank you, Mark. Brent, any questions in the appellant's absence regarding the recommendation?
No, I have no questions, Mr. Chairman.
Thank you. Robert, any questions, or you want a minute to?
No, I do this.
Okay, okay, and I have no questions either, thank you, Mark, for the explanation. Actually, my only question would be when, I guess when the fire damage is repaired, there'll be a permit issued, and I guess the department will
Correct, yeah.
visit the property. and-
We will probably revisit the value, if any extensive work is done to remedy the fire damage. But that won't occur until all the work has been completed there. So-
Okay,
So is there some tenants that are not in the building because of the fire damage?
Correct, yeah, the restaurant currently is closed up. The restaurant had a fire, from my understanding, because the owner was out of the country, I couldn't actually get inside to see what the current state of it is. But I do know that it was locked up and there wasn't anyone in
So
there.
did it affect any of the residences up above?
As far as I'm aware, the residential folks are still there, but again, I wasn't able to gain access to the property to verify.
okay, and I have no questions either. That concludes 580 Toronto Street. Thank you, Mr. Truglio, pardon me, and